Hi, Adrian Player here. In this video, we're going to be focusing on max borrowing power. Now, over the weekend, I've been participating on some online forums on Facebook. Now, in this particular Facebook group, it's mainly filled with investors. And there was a person that put up a post saying that they were maxed with their borrowing power and they weren't sure on what they could do regarding borrowing power and buying more property. So I jumped on the forum and I gave them a reply, and this is what I went through. So one, we're going to talk about a very simple example. So a person that's earning $100,000 a year, including all of their rent that they're getting on their investment properties and their base wage. So $100,000 a year annually. So this is the process that we normally go through, and we're not going to talk about specific banks. We're just going to talk about policy and my process to help a person to potentially buy their next property. So normally when you look at borrowing power, you start with the big six banks. So with the big six banks, normally you can squeeze out up to 7.5 debt to income ratio. So that person on 100,000, including all of their rents at the moment, could stretch the loan size up to about $750,000 maximum that they could go out into the market and get as far as loan size goes. So that doesn't include any of their deposits that they've currently got. All right, then once we're at 7.5, and the thing that you need to understand is that ASIC and APRA have come into the industry, which are government organisations, and they've come in and they've put all these different rules on borrowing power and debt to income ratio limits. So this is, I guess, a response video after a lot of those changes, because before those changes happened, you actually had a few maybe big 8 banks that you could get comfortably up to about an 8 debt to income ratio limit, but now it's more towards the 7.5 that you're capped at the moment. Then once you've gone through that first step, you're onto the second step. There's one particular mid-tier bank that has a better rate than the big 6 banks, and it's a non-ADI. So it's not a bank that takes deposits, it only gives out loans. So all these ASIC and APRA rules do not apply to them. All right, so I've sent quite a few clients to this lender, and we've managed to get them in the last, say, 3 months up to about an 8.8 to a 9.2 debt to income ratio limit. So you've got this easy example of a single person, no kids, not a whole lot of liabilities other than the mortgages, could potentially get up to maybe a 9 to a 9.2. So that brings them up to about 920,000 loan size. Then once you go through that, you can go through, your next step, which is your non-conforming lenders. So I won't talk about a specific lender, but I'll give you a range of them. So Liberty, Latrobe, Pepper, Bluestone. So there's 4 good non-conforming lenders out there, and there's a couple more as well. Okay, some of these lenders, when they look at your current payments that you're making, so your mortgage payments, they don't look at it like the big 6 banks. So they don't stress test the borrowing. Okay, so if you've got a mortgage payment of $3,000 a month across multiple properties added up, they're going to take it at $3,000 a month. They're not going to stress test it and put a loading of 3% on top of that, which enables you to borrow more. So you might be able to get 1 or 2 extra properties by going through one of those banks. And the good thing about some of those banks now is they've got different rates. So a lot of, in the past, you used to go there if you had really bad credit or you had problems with closing on a property. But now most of those banks have a prime product rate, so they're not very different from the big 6 banks. And potentially you can get maybe an extra 1 or 2 properties if you go down there. All right, so that's the third one. Now the fourth one is potentially you could go down the ABN self-employed route. So if you've got an ABN that's been active longer than 24 months, there are specific no-doc and low-doc products that enable you to put a 20% deposit down, so a much larger deposit. There's no lender's mortgage insurance because you've got the larger deposit. Okay, and there's two banks in the market that enable you to do a self-declaration, okay, plus the accountant signing off on your position. So as long as you've got an accountant that's very well aware of your total position and how you're acting with all the mortgages, and that you're ahead and the cash flow is good and they're lodging your tax returns, so they've got a very good idea on your total position, you could potentially revalue, 3, 4, or 5 or 6 of your properties if you're capped there. If you've held them for 12 months, they could have gone up 5 or 10%. So you revalue them, you pull the money out up to 80%, so you don't have any lender's mortgage insurance, and then you put that into this product on a 20% deposit, and you don't need to give any information regarding your bank statements, no information regarding stress testing your borrowing. They're not looking at your income. They're not shading the rent that they're going to use for the application. The only thing they're doing is looking at the self-declaration you've given them and that the accountant has signed off on the product. And right now there are two banks that are actually under 3% on rates for that product. So if you've got an accountant that's very good with investment properties and understanding on what you're doing, you could potentially continue buying. So every year revaluing your properties, pulling money out and buying properties on 20% deposits using this product. Okay, then the next one is potentially going through the commercial arms of some of the banks. So not a lot of clients know that you can purchase residential property with trusts. Okay, and if you do that and you put enough of these properties inside of one trust, there are some commercial arms of banks that will treat you as a professional investor and will only look at the financials of the trust. So they won't go and look at your 5 or 10 other properties over here. They'll actually only look at the properties that you bought in the trust and how self-sufficient the trust is. So that's potentially another way for you to continue buying. Okay, then you've got other ways that you can continue buying. So you could go down the commercial property route. Now, there are different ways that you can show that you've got the borrowing power for commercial properties, but the easiest that a lot of people use is a lease stock. So if you've got a 25 or 30% deposit, depending on the security that you're looking at, and it's already got a fixed lease in place, and that lease is on commercial can be quite higher because it's a lot of the time it's like a net yield of 6, 7 or 8%. A lot of the commercial arms of the banks will just look at that and then that's it, as long as you've got the deposit. So again, you've got 5, 6, 7, 8, 9 residential properties. Keep on revaluing the properties, pull the money out every 12 months and then put it towards a commercial purchase. Okay, so that's another way that you could potentially continue buying. All right, and then you've got, I guess, one last way that you can continue buying. A lot of people, when they're capped on their residential lending, what you could potentially do, and this is what my wife and we're going to do, is if we haven't done super contributions for 3 years, okay, what we're going to do is we're going to backdate 3 lots of $50,000, which is the maximum cap for a non-concessional contribution into super. So $150 for me, $150 for my wife, start an SMSF, put 300 grand in there, okay, and then we're going to buy 2 investment properties with the SMSF at 80%. Okay, so again, that's a way for us to get 2 more properties when we thought that we were capped. All right. Now, bear in mind that a lot of the stuff that I've talked about, especially if you're wanting to cap out with your lending, you always need to have a good team around you. So 1, you need to have a good mortgage broker. 2, you need to be getting the advice of an accountant. And 3, if you don't know how to handle your money or the risk associated with doing this, you need a good financial planner. All right, but this just shows you that the majority of the people that are dealing with either lenders direct or 90% of mortgage brokers don't truly understand how borrowing power works. Because if they're giving you a number to say that you're capped at this max borrowing power, and then they haven't talked about the 7 other different things that I've talked about on this video, they're not, I guess they've got a basic understanding on how borrowing power works. So I haven't even talked about the banks that do this, but obviously there's multiple options for each step. But what you find is so many people are stuck on either step 1 or 2, but then the broker's just telling them that they're maxed when really they're nowhere close to maxed. I mean, a lot of these people, they're sitting on over 20% deposits, and they don't know that they could go down the ABN self-employed self-declaration route with an accountant sign-off. They don't know that they could start buying commercial property on a lease stock. Okay, they don't know that they could pull all of that money out, put it into an SMSF, and then buy 1 or 2 more properties there. There's so many other options that you've got available to you. You just need to be dealing with a broker that understands all of the steps and walks you through it. Okay, so I've had 3 or 4 clients from that group that saw my post reply. They've come back to me and they've set up calls for Monday, Tuesday of this coming week. So if you are one of those people that thinks that they're close to maxed, but obviously after watching this video you know that you're not, send me a message, send me an email or book an appointment straight into my calendar. I'll see how I can help you. Hope this video's added a lot of value to the community, and we'll see you on the next one. Have a great day.